Morgan Stanley beat Wall Street estimates this morning as trading revenue rose. For more on their release, we're joined over the phone from Chicago by Sandler O'Neill financial analyst Jeffery Harte. So, Jeff, the stock is up about 5% in the pre-market. You like this report. It's a positive and a big surprise here.
Yeah, I mean, surprises in earnings lately haven't been surprises, so to speak. But what we saw from Morgan Stanley here was much better results than I was expecting. I mean, we knew they'd have a good investment banking quarter. Didn't think they'd have this good of an investment banking quarter. But the thing that really stands out is trading. You know, on a core basis, it looks like their fixed income trading revenues were only down 1% sequentially. You know, that's versus peers down a lot more. So it's looking like Morgan Stanley is joining the ranks of J.P. Morgan this quarter of having one of the better trading quarters, but actually ahead of them, and that it looks like they kind of had the best trading quarter.
Right, they're the only investment bank that showed a quarter-over-quarter increase in that area. They did better than Goldman Sachs. I want to be careful here, though. It's one quarter, Jeff, and these guys can be very volatile because of those trading volumes. So can we read too much? We were just talking about this with Eric Schatzker. We've got to be careful, though, here.
Well, you know, that's a good point. And trading comes and goes. You have good quarters, bad quarters. So a lot of times it depends on how you've positioned yourself specifically around client flow and commodities this quarter. So it's tough to extrapolate it forward. But, you know, usually market reactions tend to forget that. So when somebody has a real bad trading quarter, the stock goes down even though revenues usually bounce back next quarter. The flip side is when you have a really good trading quarter, you know, the stocks usually go up, even though it's really not indicative that trading has to be any better in following quarters. I think that the breadth of kind of good news or fresh air for Morgan Stanley here, though, is especially in fixed income trading, that's been something they've been trying to rebuild and show some market share gains in. And this quarter, they can really stand up and say, we delivered. And just as far as a confidence in management and their ability to delivering good fixed income results, I think is not only a good bottom line victory, but from a symbolic standpoint, it goes a ways toward calling investor fears.
Jeff, good enough to raise compensation costs. And I bring that up because at the investment bank, compensation has gone up about 10% from a year ago. Pay at the institutional securities unit, which employs the traders and the bankers, that was up, it was about 48% of revenue. It was up from 39% in the first half of 2010. So is it good enough to boost compensation that much in your view?
Well, you know, Morgan Stanley, let's put this into perspective. I mean, the 64 cent a share ex the Mitsubishi loss still only looks like a 10%-ish ROTE. So, I mean, this isn't like a blowout quarter as far as what we would expect to see from a Morgan Stanley in a bull market. This is a very good quarter, relatively speaking. But one of the headwinds for Morgan Stanley has been they really have been trying to rebuild some of their fixed income trading business, and that involves bringing in a lot of people. And when you bring people in, you tend to have kind of some guaranteed costs along with that. So I think what the driver of the year-over-year and even sequential, but specifically the year-over-year cost increases isn't so much that results are that great as much as it is they've been bringing in the people and kind of comp expenses are going to be somewhat fixed. It's a matter of whether these people can generate the revenues, and they're looking like they're generating the revenues. So that was kind of a long-winded way of saying a hiring spree, for lack of a better term, over the last couple of years is a big part of why their comp expenses are up. What's
your confidence in James Gorman? You sound pretty confident in terms of coming off of this release. Do you think he's doing the right things, taking the right steps there at Morgan Stanley?
I think so. I mean, I like him. I liked him back at Merrill Lynch days. He may not be he's more of a retail than maybe an institutional / trading background guy, but I think he's smart, kind of gets the businesses and lets people do what they're supposed to do. So with some of the missteps they've had over the last year and a half, I think some investor confidence in him is a little shakier. But I'm probably a bigger fan of his than most.
Anything in this report, Jeff, that disappoints you here? I know you've got a buy rating on the stock, but anything that you're finding a little disappointing?
You know, at my first run through it, and there's always more details to get to, no. I mean, it would be nice if the environment was better. I guess if there's anything to be disappointed by, it's that we're excited they posted a 10% ROTE. I mean, that's not a very strong return for us to be calling it a really good quarter. But, really, it's relative to what we've seen from peers. I mean, they delivered pretty good results, and I'm not seeing much for games or gimmicks to kind of get there. These look like pretty solid results.
We're going to leave it on that note. Jeff, thanks so much. Jeff Harte breaking down those Morgan Stanley earnings.